Welcome to the Independence by Design podcast, where we discuss what it means to be a business owner and ways to get unstuck from the day-to-day so we can design a business that gives us a life of independence. Using your assets to win in your marketplace so you can outbeat the competition by getting that high hill is what I'm going to be talking about today. I've got Greg Meredith on the show. He owns a company called Simply Strategic. He also owns a small manufacturing firm. I have done 3 strategic planning sessions with him and clients over the years. And what we're going to be unpacking is his 9 keystones of Simply Strategic. We're going to be screen sharing so you can actually follow along and see what does an actual strategic plan consist of, and how is a strategic plan different than a business operating system like EOS, and then how does a strategic plan integrate into your ownership roadmap and your ownership operating system. Greg is going to unpack some of my favorite keystones, from his doctrines to the flywheel to his winning position, that he's going to unpack in great detail. So you're going to love it. I hope you enjoy. And without further ado, here's my episode with Greg. Good morning, Greg. You got yourself all dapper Dan up for me. So this is going to, you must be ready to drop the nuggets today.
Wisdom is coming from me when I put a jacket on.
Excited to have you back on. We've got a couple other previous episodes from the past, but I wanted to reorient us. You've been working hard at Simply Strategic. You and I just got off a mutual client engagement that I thought went pretty well. The client gave us an A-. Well, we'll differentiate between you, me, and the whole process. But the whole process gave it an A-, and I gave him an A-, B+, or whatever. And I think it went fantastic, Greg. And before we jump in, I'll continue to frame up how strategic planning fits in the ownership operating system, as well as compared to the business operating system like EOS. But let's start with your definition of strategic planning, and then what you think most people get wrong about strategic planning.
Yeah. Well, the big point that I always make, Ryan, is the difference between strategic planning, which is a formal process of actually going through and creating a plan, a strategic plan. So you start at the beginning and you work your way through, and you get to the end, and at the end you have a plan. So I make a differentiation between that and strategy. Because too often people think just because I go through a planning process, I have a strategy. And unfortunately, that's not always the case, right? You might have some of the elements of a strategy, but unless you intentionally set out with the goal being of having a real strategy, too often you'll have a nice plan that's very operational, it's very tactical, but you didn't answer some of those fundamental foundational questions about strategy. And so I always try to start there and say, hey, we're going to have both, right? We're going to start with a planning process, but the goal of that planning process is to end with a strategy. And so that's the first thing I would tell people that are thinking about this as a process. Process is great. Everybody needs a plan. It's better to have a plan than not have a plan, but you better end with a strategy at the end, or it's been a helpful exercise that you've left a lot on the table.
Love the bifurcation. So then you have a specific definition of strategy, and there's a couple isms that I've gathered from you over the years. So like I'll throw out mine after you give yours. But like what is, and maybe within that there's your You go first, because then I got a follow-up.
So definition of strategy that I use, and this is always kind of one of those questions that I ask people up front, is the executive team sitting around a table, and if we talked about other terms in business, hey, what's marketing? Hey, what is what's on a balance sheet? What does the asset categories? What do each of those asset categories represent? The people around the table would give you a very similar answer. But if you ask people their definition of strategy, you're going to hear 6 different things from 6 different people. And so we start with this core definition of strategy is using company assets to create a high impact winning position. And that basically guides our process, where we say, hey, we're going to talk about some of the fundamental keystones that are going to help us lay the foundation. We're going to talk about the essence of your strategy, which includes your company assets and your winning position. But we start with that definition so that all parties can say, when we talk about strategy, this is what we mean. Using company assets to create a high impact winning position.
Um, I love it. And some of the things, so and I don't know where along our journey that I picked these up, but when I think about strategy, because I've listened to a lot of podcasts now with like, the Marine Corps and Navy SEALs, whether it's on Huberman or Rogan or whatever. And there's always like this, things that they get, that come from them. And you talk about this, is it the winning position that's on the top of the high hill?
Yeah, absolutely.
And let's talk about like what that means for a company. And I want to go straight there, Greg, because when you and I were sitting at dinner and you're like, okay, most of my people that go through this kind of get that. But that's where I think that's the heart of everything that you're doing, is coming up with that winning position on that high hill. And you're like, I think, Ryan, the thing that you want to die on is the 3-statement model. And I was like, yes, I want to jam that shit down everyone's throat. However, we know that we have to have incremental progress. And so there's I think, but what we can get done with this is, what does the ideal look like? So that way we can help people picture it. And then as we go through the rest of this conversation, it's about making incremental progress to get to that. But why is it so important for you? And why would you die on that hill? And what is the winning position on the hill?
I think that the reason that I try to force everyone to that place of saying, how are we trying to win in our marketplace, is because so often people, especially that are running a small or a mid-sized business, right? So anyone that's 2 million in revenue up to 500 million in revenue kind of fits in that category, somewhere between a small business and a mid-sized business.
And you've worked with everybody in that. So for everybody's context listening in, you have engagements that you've worked with on that spectrum too, right?
Absolutely. And probably that 20 to 100 is a sweet spot, but I have clients that go a little smaller than that, clients that are bigger than that. And when we get to this place where we've been building towards this idea of a winning position, and it is that high hill, right? Because people understand the high ground. So I'll start with the analogy of a military operation. The winner of that military operation is often going to control the high ground. And so what are you going to do? What is in your marketplace with the assets that you have and own and control? Which high ground are you going to go for? And it forces people to say, oh, okay, so strategy is more than just deciding we want to grow. Strategy is more than just deciding, hey, we want to increase our margin. Those are outcomes of a really good strategy. It's saying, looking at the battlefield that is my market, where's the high ground? And there's typically a limited number of hills on the battlefield. And this is the one that strategically we can win and we should go for. And so just getting people to think that way, to say, hey, our strategy is about intentionally saying, we're going to go there, we're going to hold that ground, we're going to win from that place, is really, really important for people to think about. And so, when you talk about building a lot of the elements early on in my planning process, I tell people, hey, you've done exercises that look at opportunities, right? Everybody has some form of an analysis that looks at opportunities, and we do too in our keystones of creating a strategic plan. Not everybody gets to the place where they actually have thought through, what are our company assets and how are we going to use them to get to a specified winning position. So it's partly educational and it's partly decision making, but it's forcing people to think through, how do we actually win? Some people talk about it as a moat, a competitive moat. Some people talk about it. One of the best books on strategy is it's called The 7 Powers. He talks about it as powers, but I'm looking and saying, what is that winning position? How are we in our business going to win? And what hill is that going to look like for us?
I love it. So we're going to unpack in our conversation the 9 keystones. So we'll even do maybe some screen sharing and because I want people to have a working session to go, okay, what the hell is strategic planning and a strategy? And that's why I think how you open it up. And so let me riff on this on strategy, or why I love your winning position. And because dude, I'm so competitive, and you and I have talked about this, both of us when we were sitting down and chatting, all of my fuel of competition goes through business. And so it's just like when I think about where people miss the boat, and then I want to explain what a strategy is compared to where people miss it, is I have a VTO from EOS and I want to hit 30 million. Great. 30 million in revenue. And like people have been hearing me harp on, okay, well, what's the gross margins? What's the normalized EBITDA? What's the free cash flow? What's the valuation? So hopefully we've gotten to the point where it's like, it's not just revenue, but it's a valuation and cash flow. But then what are you doing to get there? And then how do you protect that? And so how your strategy and strategic planning fits into the ownership operating system is, let's say someone has a forecast and they just base like you'll go, okay, like at least I have a 3-statement forecast, or even like worst case, it's just an income statement. But like, let's hopefully they understand how to reinvest into their company. But you have I'm just picturing, Greg, I've got the annual 12-month budget, then the out year projections at 2 through 5, and you do some basic assumptions. Like, okay, well, based on I've got Kim Clark, who's on the show a lot, talking about ITR economics, going, okay, well, here's where I'm in the economic cycle. Here's like what my growth trends are for the different lines of business. And you could like peg your forecast to the valuation that you want. But then the question is like, how the hell are you going to get there? Like, are you like, do we believe the 8% growth? Do we believe the different revenue lines that you have just randomly put, not randomly, but like, how have you thought through protecting that battleground? So it's like this different layer of thought that goes on top of the financials.
100%. It's a layer of thought that says, how do we actually think we're going to win and be able to grow at rates that nobody else in our marketplace is growing at, or
keep it, or
never
protect
proven
them,
to
right?
ourselves that we've ever done.
Right. And the okay, so now like with the ownership operating system, how I think about strategy, it's in my predictable revenue module, which is like, we want to land revenue on the income statement every month based on what revenue lines and what GL codes, and do we think that they're the right services and products in the right locations to get to that high ground and to win. And so when I think about you back to then, when strategy and strategic planning different than an operating system, which we will talk about how an operating system fits hand in glove with what I'm talking about from the ownership operating system as well as strategy, is it's that trade-offs. And so what I said when you asked the group a couple weeks ago, like, what do you think strategy is? I'm like, you have to say no to shit. You have to say no because we have a finite amount of time, people, and money. So we're going to do these things and not these things. And deciding actually means to say no to everything. But then you talk about your inverse situation. So what are your thoughts on that?
Yeah. No, I think that's exactly right. And when you talk about saying no, what you're really doing is you're saying yes to the things that you've said are the most important. And too often, we'll do this exercise in my system. It's in Keystone 3, but everybody does it. They brainstorm what we could possibly do, right? Here are all the things that we could go and invest our time and our talent and our treasure into. And they come back and they say, yeah, this is great. Let's go do it. Without really saying, okay, can we do half of this, what we've scoped? And so we, as an outside consultant, can look at them and say, guys, you are way too ambitious about this, right? One of these things is going to consume all of your talent in this area of the business. One of your things is going to consume, all of the money that you've allocated for these types of endeavors for the next 3 years. And here you have 8, 10, 12 things that you're looking at, and everybody's pet project is still on there. And you haven't done the hard work of saying no. So you really can't say yes until you do that first. And so one of the things that was great about having you, and we were able to be in that planning together, was you must have made that point 3 or 4 times over the 3 days that we spent together. Guys, it's about trade-offs, right? Yes, we could do a lot of this, but you have to say no if you're really going to say yes to the things that are most important. And so for me, emphasizing to the groups that I'm talking to, it's not about saying, hey, we're missing all of these assets, let's go get them all in a year. It's about saying, here's the asset that we're missing that is the most strategic, the most important. We're going to spend the next 2 or 3 years turning that from something that's a gap today to something that's going to be a strength in two,
Hmm.
3, 4 years down the road. And so that effort of prioritization is really, really important. Now, on the other point that you were making, I think you were talking about what I call the opposite rule, which
Yeah, yeah, yeah.
which I stole unmercilessly from somebody who writes a lot about strategy. And I thought it was a brilliant framing device. Too often, the other mistake, there are lots of mistakes that people make when they get to the point of saying, hey, here's our strategy. One of those mistakes people make is it's really generic. And they say, oh, we're going to do X, Y, or Z. And everybody looks at it and is like, well, of course you're going to do X, Y, and Z. That's what every good
We're
business
gonna
tries
have
to do.
integrity,
We're going
Greg.
to have high integrity. We're going to have great customer service. We're going to really invest in our people. And it's the what I call the toothless decision. You've not made a decision because the opposite of any of those is ridiculous. We're going to have terrible customer service. We're going to
We're gonna
not
lie, cheat,
invest
and
at all
steal.
in any of our people. We're going to hire the most incompetent, the least valuable folks we can find. And so, that opposite rule in strategy is saying, hey, can you define your strategy in such a way that a logical, savvy, even wise competitor would look at the opposite of your strategy and say, hey, that's viable. That's a good strategy. We could do that as well. And so you force yourself when you get to that point of defining what your strategy is going to be, and you flip it around and you say, okay, what's the opposite of this? Ah, okay. Boy, that's viable as well. And so finding out and figuring what the opposite rule is really a good test when you're looking back at your strategy at the end to say, does the opposite rule hold? And if it does, then you've probably worked hard enough making trade-offs and being specific enough in what you're going to try to go and do to where you've developed a true strategy.
And let's maybe give a couple examples, and then I want to pull up the 9 keystones to help people figure out how do we get here. And what I like about what you're saying is that it a couple of things. One is when we talk about it's forcing people to make decisions because you're saying this is the high ground that we want. Because you could go to a couple high grounds. It can kind of like said, you could have a high ground that you're going to go over to that has this kind of landscaping over versus this high ground. And we believe it's going to win because insert thesis. But you could look at both to say, hey, like that could make sense. And like relevant to like my situation, Greg, and like we can talk about other sample clients and you got some case studies that we'll be able to go through with the Keystones is. So I was on a call or podcast with my friend Nick Bradley, who has a business similar to mine. He like literally he's been in Taki Moore's program. He like came from private equity. He has a coaching business for business owners. And we've just become friends over the years. And we've just been like pushing against each other, like trying to figure out like, our markets. And like, it was like a month ago, like 80% of our stuff is the same. Like from like build an operational business, get your financials put together, get out of your job, like figure out all these things. But what we landed on, Greg, after like literally we've been talking for so long, he loves the arena of doing deals because he came from private equity. Like literally loves it. So 80% the same, but eventually you're gonna have to organize your company to a certain way to get the highest purchase price with the best terms to a third party sale. And like what I really love is like the small giants conscious capitalism, like keep your business for internally, whether it's an ESOP, internal buyout, like a family business, as much as humanly possible. So that last part is slightly different. And like it was just this aha, but I think that's hopefully relevant to the listeners going like, it takes all of that effort refining to say, like, I can't serve everybody. And then not to mention like I got multiple deals going on right now. I'm just like, well, I'd rather do these other things with the time that I have. So like any other examples that you want to give?
Yeah. So Fidelity and Vanguard are a great example, right? Two different companies. One has chosen a strategy that, hey, we're going to run and operate at the absolute bare minimum costs. We think the market's efficient, and we're not going to invest in people that can pick stocks and win in the market. we're actually going to just, hey, we're going to take market returns, but we're going to do it at such scale and with such low costs, you're actually going to do better with us because we're going to return more higher returns for you because we do it at such scale and with such
Hmm.
efficiency. Whereas the other looks and says, no, 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 no. We're going to hire the very best stock pickers in the business. And we're going to drive so much value because our people are the best. And they're going to put together winning portfolios that are way better than
Is
other.
Fidelity still pitching that?
Yeah, that's been their business
Oh
model.
boy, they're in for a rude awakening.
Yeah, yeah. Well, it's
I'm
a
getting, I'm getting the concept though, but I was just
Yeah, yeah.
digression.
And so two different people that look at each other and say, "Hey, we're going at this in a very, very different way." And so the opposite of one strategy is basically the other.
Is
They both
valid.
built really, really winning, viable businesses, and they've made a successful place in the marketplace. I would tell you another that I've seen recently is when I think about one of my clients that I've been working with now for probably close to 2 years, they have realized in their marketplace the winning position that they have had in the past has always been a position of integration. And so a winning position of, hey, listen, our clients come to depend on us for the equipment that we sell them. And once we've sold them a piece of equipment, what we're going to do is we're going to go in and we're going to service it really, really well. And we're going to take care of them. The parts are going to be are fantastic parts. And we're just going to win over 30, 50, 100 years because these are long relationships. And we are going to be their outsourced vendor for this type of equipment. And we're basically going to become the ones that they depend on. What they've realized is that they've had competitors that have taken a completely different approach. And the competitors have said, you know what, that used to be the way people win, was to sell these pieces of equipment and then be there to service it for 30, 50 years. But their competitors have taken an opposite approach. We're going to be the low cost provider. These are big capital expenditures, and we're going to come in, we're going to undercut price. We know one of the things that you're probably going to do over the course of the life of this machine is you're going to find another vendor who can make your parts for you. So we're going to not provide a lot of service. We're not going to try to win the parts business. We're going to win on the initial sale by giving you a higher ROI up front. And so my client had to really wrestle with that reality and figure out, okay, how do we win in this marketplace when the opposite of our strategy, hey, we're going to be here, we're going to be integrated, we're going to be here for the long haul, is now under threat by somebody who's coming in and saying, no, we're going to take an opposite position and say, we're going strictly ROI, and we're going to come in and we're going to try to clean your clock on that initial sale and keep you from ever getting a chance to integrate with your clients.
It's so that example is very similar to my old industry. And I know Josh and Pat are probably listening in right now. And, and, in my old industry, then I want to pull up the Keystones, Greg, to help people get and understand how we get here. But the question at hand was when we started with copiers, and then I get like differentiation was colored copiers or duplication, which is obviously not a thing anymore. It became document management, managed IT services, full integrate, VoIP, all that stuff. And we didn't go through a strategic planning process, which I really wish we would have. We would have we listened to all the consultants who were slinging their shit so that way we can hire them to do all this stuff. Realized why, like over time, like different business models, different compensation structures, different margins, different skill sets. Like, oh my God, did I spend so much time, so many headaches, so much money learning that this was hard. I mean, the industry's gone this way, but I think I know that most of the industry learned this all the hard way. And integration was the winning position thesis, essentially. Like when we sold, people couldn't, you had locked and rolled and bundled and all this stuff. We could just hand our clients, the customer contracts to the buyer. However, there was one industry or one competitor in our industry that was like, we don't care about IT services or any of this shit. We are going to sell copiers because they're copiers and we're going to fix them. And it was high operational execution. And so it was just like, and by the way, they kept making money. And Jerry, his name was, who owned the company, he's like, Corey, my dad, he's like, we don't have to do IT services. We just keep doing this stuff really well and we make a shitload of money. And it was like a really good thesis. Everybody else had caught, the flashy object to go. Now the industry's, it's evolved a lot over the last 15 years. But I think what could maybe help is let's pull up your winning positions and talk about those few. And I know I'm taking you out of order with your keystones, but then I think we go back and we cover each keystone. And so before you screen share, and I'll let you screen share here. And so people that are listening in, you can we'll talk through it, but you could also pull up Spotify or YouTube. Greg, the last comment before we're pulling this up is I have been in like every time I look at a company executive team, what I really appreciated about the group a couple weeks ago is like, we have to fight over this shit. These are decisions. And you mentioned multiple times thinking, and like, there was such high trust in that room. There was some serious tension points where we're like, oh boy, here it goes. And like the trust is what allowed the ideas to get rammed against each other to make a final decision. Because you can't do it all. And so like, it's the trust, it's the people, it's the intellect, and it's the process that's jamming this through to make a final decision.
The tension needs to be part of the process. And without the trust, the tension overwhelms the process. Because if you don't have the underlying trust, the natural tension that you need to create when you're making real and important decisions, you end up actually in a worse place because you don't have the trust to make it through those hard conversations. And so when you and I have experienced both, right, where we've been in rooms where the trust wasn't high enough and we never made it through the tension. In this last client that we were working with together, there was a lot of tension, and there were times where you could palpably feel it, but the team trusted each other. They liked each other. They wanted to get through to the other side. And the process was allowed to work. And it's in
the middle. I said like when one of the middle, I was like, the middle is messy, man. And like the other side is so worth it. And like the big gotchas for people, because like I want to just make sure that I'm hammering this home, because like we could pull up, we're gonna pull up like how to do all this stuff and like the different components of this, but like this is where all it goes off the rails, because power dynamics of someone that pays the bills and pays payroll, like that's going to be a massive factor in that room. And then whether people like each other or don't, and whether they're willing to like, because like at the end of the day, someone could just completely disengage and like, then their ideas are not working and then they're not bought in. Cause like where this all shows up is like when we're sitting in an L10 or a monthly or quarterly meeting and people are freaking making decisions based on different beliefs and different things. And it's just like, what a colossal waste of opportunity and potential for a company, where when you get everybody aligned, like back to Navy SEALs and the Marine Corps, you can't go on a mission with two people thinking they have two different high grounds. Like you're all going as a team to one. And so I think it's just it's so important, because if the trust and the power dynamics and everything are put in its right place, the process is going to suck sometimes, but the outcome is worth it because it's the refinement that gets you there.
I think the best engagements that I do are the ones where there is a lot of back and forth in the process itself. When it feels a little bit messy, when it feels uncomfortable, those tend to produce the best results. And the ones where you're just kind of going along and everybody is agreeing with one another, there's a lot of head nodding and it's a check mark, those tend to not produce nearly as good of kind of that final product as the ones that are fraught with tension, because people are tied in. They're passionate. They're excited. They want to see their good ideas get sunlight. And then if they can say, hey, that was a good idea, that is a good idea, that doesn't fit, I understand. The rest of
I understand, but I'm still bought in.
I'm gonna get on board and I'm gonna do this.
I
mean, that's the absolute best outcome that you can have, is when people feel heard. They know that their great ideas were listened to. Some of them were accepted, some of them weren't, but everybody can walk away and say, man, that was really fruitful, and we all had an opportunity.
Yeah. And like at the end of the day, because the owner operator listening in If you want to get out of your operations and run the company from the boardroom, you can't do all of this stuff. Like you have like there's no checking the box to where like the executive team actually embodies and believes where they're going to go. Like you can't fake religion or your faith, right? Like I mean like and so I and by the way, like if you're thinking about it, put your investor hat on for a second. What company do you want to buy? A bunch of C executives who are kind of bought in, like, yeah, we do US and we're kind of growing. Everybody, and like, but like, how are you getting there? Where are you going? And like, they're all just like, you can just feel that, like, it's just a wildly different. It's just such a different situation. It's almost binary.
My business owners, the business owners that I work with, that that can be both hands-on, the stuff where they're absolutely essential, and don't try to avoid responsibility, right? They take ownership of the stuff that they cannot delegate, but they are really good at delegating everything else. Ryan, you see it, I see it. They're the ones that are constantly growing. Their organizations are growing. Their people love working with them. And you just see this compounding positive effect.
Right.
When the owner tries to own things that they're either not the best at or that are slowing down the organization, that's when you see frustration. Those talented other executives start to look around and
like,
say,
peace out, I'm out.
yeah,
like,
what
why?
am I doing? They either check out on the job or they check out. And man, it's so destructive. But when that owner can say, hey, here are the three things that I cannot abdicate, I'm going to absolutely own them, and I'm going to hold people's feet to the fire on X, Y, and Z. But at the same time, I'm going to let these people have freedom to run and operate. It's a really powerful thing.
It is, and I think it's a opportunity to actually hand off the baton as that owner operator. We're going like, hey, instead of having it all be in my head, we're going to extract my tribal knowledge, synthesize it against all the executives to get them completely bought in. And then now they've got the strategy agreed upon. We get the financials to say on track, off track in a very objective way. And then you execute with an operating system. And then you can actually step back and delegate without doing this. You're just wondering. So like, let's pull up the winning positions first, walk through some of those. And then I want to go back to then, how do we agree upon this stuff and how some of the exercises that we have walked people through?
Well, this is a little winning positions, and it's a little bit busy, but I'm going to start here because I think it provides enough for people to look at and say, okay, what does he mean when he's talking about winning positions? So the first three listed all are trying to win through exclusivity, where we would look and say, there's something exclusive, there's an offering being made, and there's some level of exclusivity with that offering. And so those first three winning positions win through exclusivity. The last two win through efficiency. And so when you're thinking about this, you can typically say, hey, I can have one of the exclusivities, and then I have maybe one or some portions of the efficiencies that are at work. But I like to think of them and explain them as separate hills. And if you're trying to win in your marketplace, which of these are going to provide you the best opportunity, the most margin, the best way to lock in your clients, the highest percent of market share? Those things are the impacts that we're looking for. And so in everybody's market, it's a little bit differently. It's a little bit different. People are competing in different ways. And the other thing is, your company has assets. And you wouldn't be in business, you wouldn't have profit if you didn't have assets. And so the assets that you've accumulated also need to be taken into consideration when you're thinking.
And they're not just your cash and your
life,
not assets on a balance sheet. It's the people, it's the IP, it's the goodwill. I mean, there's a lot of stuff involved in the assets, right?
All of that. You're exactly right. It's all part of the it's all part of the plan. It's all essential when it comes to what we're trying to drive. So it's assets that include things like processes and procedures, it's systems, it's technology, It's the people that you have working for you and the expertise you've developed. It can be financial power. It could be physical assets. There are lots of different categories that you can look and say, hey, all of those assets play into creating this winning position. So let me just go through them really
Yeah,
quick.
perfect. I
Singular
love it.
is, hey, we're the only
Well, so
person
you said singular.
business.
I interrupted you. Sorry. Yeah, go ahead.
No. Singular. Singular is the only business with access to those rare and valuable assets. So the great example of this is IP or talent, right? There's a major arms race right now for the big tech companies. They're all trying to hire AI engineers and create as much talent as they can when it comes to this AI arms race, right? And so if you are the only business, for a while, Google owned 90% of the AI talent in the world. They had a really great head start when it comes to creating
It
a winning
really is
position.
monopoly, right? I mean,
Yeah,
singular is
where they have a chance to be singular.
Yep.
It can come through IP in other ways where you have a patent, you have lots of different ways to get there.
I got a good one for you. I just came to mind. Old client of mine, super good dude. He manufactured and sold solar panels up in the Yukon. He just couldn't get them from anybody else. He's like,
Yep.
because like we are the ones driving our trucks over the ice, and like in summer we can't. No one can deliver them. I'm like, there you go.
Here we go. We're gonna win. Second one is integrated. This is where you basically are inflicting, and it can come across as negative, but it really is driven by this idea that it's going to be very expensive for my clients to switch away from me, right? So that idea of switching costs, we're so integrated either on a relational basis or on a system basis that for you to leave me is going to be so painful for you that you'll endure a lot because we are so well integrated. And so this can happen when you have a relationship, right? A lot of small businesses are really going for this relational integration where your financial planner, your financial advisor, they might not be the best at what they do. They're good, but man, oh man, would it be really hard for me to say, I'm not going to work with this financial advisor anymore. I'm going to I see him 3 times a week because our kids play on the same sports teams. We go to church together. We have family members that overlap, right? And so this idea of relational integration, there's a cost to switch. Even more so, it comes out when it's systemic, right? When you've got a piece of software that runs your
Your
business
ERP
and
systems.
it's integrated, yeah, your ERP system, and it's integrated into all facets, and they raise the price 25%, or more likely they raise it 200%, and they say to you, we're going to bet
Thank you. Can I have some more?
that you are not going to do what it takes. Well, I just went through one of these, right? I have a small manufacturing business that I own. The accounting system that I chose, they put in a 200% price increase. And they know, hey, I probably am not, it's not a huge cost still, but I'm going to just live with it because it's like, oh man,
Yep.
to rip
And
it out
that
of
was
one
what you
small
said.
business is going to be
Your
painful.
client who had the machinery that he was fixing up and service contracts was the integrated.
100%, 100%. Preferred all is about it's all about ROI. So how do I ensure that my clients get the highest return on investment that they could possibly have? This is an example that I typically use is the general, right? We'll keep you legal for less. You might not ever want to be kept legal for less from a car insurance perspective, but there's a huge segment of the marketplace where that's what they want. They look and they say, give me the absolute lowest amount of coverage for the least price. That's who I want to use. That's an ROI play, right? And so what's interesting about ROI is that you can play at both ends of the market. You can play in the middle, and there's room to win in that place of saying, hey, we have preference for a really, really attractive segment of the population. And
Well,
so,
and Greg, like my old industry, the example I was giving you, most of the industry went to integrated. We're like, I mean, my God, with the Minnesota Wild the contract we had a help desk where we had an integrated software help desk together, like hosted people on site. Like, I mean, software, IT, like everything was bundled together. and it was fully integrated. Whereas in the other people that we were competing with, it was as much efficiency in your copy or service contract and as low of a price as you could possibly go.
Yeah,
And they were winning, and they were both good ideas.
that's right.
But like the ideal client profile actually ended up being different, because someone that wanted a one number to call that had wanted an IT partner was different than someone that was the facilities manager buying a copier for the lowest price.
Yeah, just getting it through. So you guys ended up in a place where it was hard to move all parts of the
Right.
organization in the same direction.
And I didn't go through a formal process to figure that out.
Yeah. Those are called strategic planning through the School of Hard Knocks, right?
Yeah, right. Time and money.
Yeah, yeah. You lose enough after a while. You turn to a different methodology. So, hey, the last two are potent, where you have deep operating excellence. This is where your people, your processes, and your technology are so good that you're able to do things better than your competition, right? So it is typically a cost play, but hey, there's a market price that's been set. We can't sell our corn for any more than the farm down the street is going to sell that same grade of corn. But man, can we get it in and out of the ground a whole lot more efficiently than they can? That's a low cost play, right? Where you can, hey, we're all selling for the same price. There's really there's no way to win in terms of exclusivity, but we have to win. We can win with deep operating excellence. And then a related but different play is scale, where you say, hey, as we get bigger and our sales volume goes up, that our fixed costs become a lower and lower percentage of our total costs. And so we're driving down our overall costs. The per unit costs keep going down as the volume that we produce goes up. And so
And I've
we've
watched
got
people where like it's like bulk order discounts, cash with order discounts, or like, I mean, yeah.
100%. One of the clients that I helped sell his business maybe 10 years ago, he was in the building products business, and he had locations in three major cities. But there was a roll up that was taking place, and he knew that there is economies of scale by these national providers, whereby what they're going to be able to buy their goods for was half of his profit margin. So he
Mhm.
knew that whoever came in and bought him, if they were one of the national players, they were going to instantly drop 50% more margin
Mhm.
to the bottom line, just because they were buying it 3.5, 4% better, and his total margins were 6, 7, 8%. So just by buying at scale, he was having a hard time competing. And so we figured that out. He figured that out. I didn't have anything to do with him figuring it out. But he said, hey, I need to be one of the guys that sells, because this market is not going to be a winning market going forward.
And you talked about in our session that like you can kind of mix and match one of these, and like I want to like put a word of caution. I want the thoughts for the audience is like I mean, you're picking a hill, right? So you can't say, well, I can kind of have all these. So at the end of the day, one of the decisions or the one of these five winning positions is going to orient and supersede all of the other decisions, but you can drag along others, right?
100%. And some of the principles that make one a winning position make another just good business practice, right? You may not be able to have a winning position in scale in your market, right? You're never going to be the scale player, but you know that as you get bigger, you're going to benefit from the impact of scale. And so,
Mm-hmm.
so I would look and say, very few clients can win in a singular winning position. There are exceptions outside of IP where you're going to be the only one that can do it. But the other four are typically the ones that most clients go for: integrated, preferred, potent, or scaled. And you look at those winning positions and you say, okay, I'm going to go for integrated, and that's going to make a difference in how I make my primary investments. If I'm going for integrated, here's where I need to be trying to win, and how I'm investing, and the assets that I need to go for, and how I'm going to leverage my existing assets. And at the same time, I know that scale is going to help. And as I get a little bigger, that's going to be, and so it really is about that prioritization and saying, hey, as a small mid-sized business, I probably can have one winning position, but be helped by these others.
And it comes up in the executive meetings where someone says, we have to pick a rock for operations this quarter. Do we add a tool that allows someone to see? Like, I was talking to this battery company that I'm a part of. I don't know if you and I talked much about that at all.
No, I don't think I know much about
Oh,
that.
dude, yeah, we got a whole lot of conversations because I want to do this for the battery company. So I'm involved in this battery company, and we're in the process of picking our. There's a mixer for this component that we're dealing with, and then there's a 3PL. Well, the logistics company will buy the inventory. They will store the inventory, and then what they actually have their own website and stuff like that, so that way, like, they fully integrate everything into, like, we're like, it will never make sense to have our own warehouse and our own shit. So like it, but like,
Yep.
my point is like, when you're sitting in an executive meeting and the company says, well, should we enhance our web portal for our clients to be more integrated, or should we do something else with our staff on the customer service? I mean, like, it's a choice that you're going to have that trade-off, and you're going to look to your North Star and your winning position to say, well, what did we choose? What's the
100%. We were working with a client that was in the health insurance brokerage business. Everybody in their industry was going for integrated. They made the decision they were going to go for potent because one of their core like insights through the process was, oh, we need to be different. We're not going to. This market is going to consolidate. It is people are buying. The younger generation is buying in a different way. Relationships matter less. They went through their list and they said, oh, and we have some of the assets we need to go and try to win with this process potency. It didn't mean that they were going to give up trying to develop good relationships with their clients. What it meant was they were saying, we don't think that's how we're going to win long term. We're going to use our company assets to try to create this process potent winning position, because we think in the long term, if we do that, that's where we can have the strategic high ground. And so they used it to make their decisions in a really insightful way, saying competition's over here, we're going to go over here. That means we're going to invest differently. It doesn't mean, hey, we're not going to try to still have good relationships. It does mean we're not going to hire as many relationship managers as we would have otherwise. We're going to take that money and we're going to use it on technology and systems and other things that are going to really drive this operational excellence.
I think that this is really important as we look at AI, and I think there's a lot of people out there that already think that their industry is being commoditized. You're gonna throw AI on top of it, and the risk and acceleration behind that narrative is going to continue to grow, I think. And like, because like price is always going to be a bad issue, or price is always going to be an issue across every single industry and every single company, unless you're Eli Lilly, like you said, and you're the only ones that have the GLP ones or whatever. And it's going to be an issue. Throw on AI, and I think thinking about your business and your service in a way that can then help you market that way, like, hey, we're going to be your partner. It's not just a commodity, and like, it just helps people get confident in like the go-to-market approach instead of just racing to the bottom.
Absolutely. And on top of that is when people start to think about this in the way that we're talking, it actually changes the fundamental questions that they're asking each other, right? It's not just it's not just how much are we going to grow or what are we going to do. It's oh, we're going back to more first principles of here's who we are, and if we want to be here in the future, we've got to make investments, we've got to change and augment who we are, rather than just saying, hey, do what we're doing, do it a little bit better, do it a little bit more, do it a little bit faster, whatever the case may be. Giving them a way to think. Yeah, it's giving them a way to think about their business differently.
What I think we could do now is with that context that we want to be on the high ground and use our assets to have that winning position, I think the other keystones, and we can kind of orient ourselves on the other keystones, Greg, and what I have seen through the experience and exposure is they're helping, the process is helping refine the decision or refine the beliefs to get agreement. And like, because there's all this stuff that has to do with the process that I love because it's all that subtle like the stuff in people's heads that are not discussed. That is what creates misalignment, and friction all along the way of trying to get to that hill. So there's all these keystones that I want you to, and we can figure out which ones you want to spend a little bit more time on or less time on. But I think we've got it teed up to now, like go through to say in context. Now the goal is to get alignment and agreement to that winning position. And then we'll talk about how that rolls into budgeting the operating system.
Yeah, for sure. I'm going to take 1 minute and just share. Typically, what we talk about is there's 3 phases of strategic planning. You do a prep phase, you do a plan phase, and you do a persist phase. And so that persist phase is what you were just describing, a business operating system. And it's taking whatever comes out of the strategic plan and implementing it. And too often, including with me in my early part of my career in doing strategic planning, I would get to phase 2, and then that phase 3 would fail. And I would see my clients have a really nice plan that they didn't execute. And so we paused and said, no, let's go back. Let's make sure we're beginning with the end in mind. You need to have a system in place, a business operating system in place so that you can have success with the plan. So we're driving towards having a really nice plan, which is phase 2, that we implement and persist in, which is phase 3. And so that kind of a mindset is there's a little bit of prep that takes place where you've got to think through what are the key issues, what do we have, what are we lacking, analyze the business in a pretty high level, build the plan, and then execute the plan. And so those 3 phases are consistently what we're trying to do.
And what I like about this is, for context for the listeners, when I think about the ownership operating system where you as an individual and your partners have to come up with what is the timeline of the valuation that I want, what is the cash flow from salary and distributions that I want on the way there, and what capital access do we have? So that becomes like the first primary constraint, because if you have all these ideas and you have to raise a bunch of equity and you're like, this is what we're going through with the battery company, Greg. It's like, okay, like we're having a conversation tomorrow with a guy that could potentially scale us internationally. And I don't know if I want to give up equity.
Yeah.
And I'm sitting there going, okay, well, what's the timeline? What's the cash flow and the equity from the ownership objectives? Once we lock that in, then we can go zoom in and say, okay, now what's the strategy between distribution? Are we going to service providers? Are we going to retail? I mean, like there's a lot of big decisions we have to make. And then we have to execute with an operating system. And almost everybody I have ever come across goes straight to execution of like think about how much things we're talking about before we go execute. And it's like people running through the forest having no idea whether they're running in deeper or out. It's just
stop and orient yourself first before you continue down that path. Okay, so 3 phases of strategic planning: prepare, plan, and persist. I'll talk just briefly about the prep phase. I always talk about the 9 signals of a thriving business. 3 that kind of fall under the operations category. Are you strategic? Are you dynamic? Are you efficient? Under the performance category, are you profitable? Are you growing? Are you sustainable? And then under culture, we talk about engaged, aligned, and accountable. And so those areas are what we spend time thinking about, evaluating, and then reflecting back to our clients that we work with, just so that they have an understanding of perception, reality, what's working, what's not, and try to do a holistic view of the business. We don't go deep into that holistic view, but we do go pretty broad. And so that is in the prep phase, what we spend our time on, where we spend our time.
And what I saw from a couple weeks ago is these 9 signals. It's like a 360-degree view of the business, not necessarily of an individual. And like what I liked about what you kept saying is it's not, you're not putting your consulting lens on it. You're just synthesizing what everybody's saying. And 90% of it is just what you heard. And like what I watch is so important behind this phase is like, what are the beliefs that everybody has? You know, because like, and I just constantly go back to my wife, Greg, because like she's a manager at a fairly large company. She has a lot of opinions that don't get heard. And what a freaking like huge missed opportunity. So you're able to like go through the most important people and the key influencers and say, what is it? What are the beliefs about the business, about the strategy, about the operations, about the culture? So you could have it like at least a realistic foundation to orient ourselves on.
Yeah, for sure. Right. That orientation and foundation is really important. I put it all into the complete business, what I call the complete business assessment. And I give it to the team when we start the planning process, right? When we move into phase two, it's after we've read it and we've talked about, hey, what were the insights? What were the surprises? And then most importantly, what did you disagree with, right? Because all opinions of all employees are not facts. And I put direct quotes in, I put evaluations in. And so the executive team has a chance to say, okay, I understand why they might think that way, but that's not true. And they have facts, they have data, they have other rationale for why that perception,
And this
why
person
that
sucks and
person's
is crabby.
reality is not reality.
I
And
said, yeah,
so
and this
we
person sucks and is crabby, and like we don't like, yeah, like it, and but it's yeah, it's just like you said, it's the mirror. Whether you like it or not, like here's what you're seeing, and you can take, yeah, you can take it for a grain of salt, but yeah.
Yep. Now this is the plan part, right? This is when we actually start building out that plan, this is where we come and we say, all right, let's talk about 9 keystones of strategic planning and let's actually build out your strategy. So the foundation of the strategy is those first 3 keystones, your doctrine, your bullseye, and your opportunities. The essence of your strategy we've talked about so far, but it's company assets, it's your flywheel, and it's your winning position. And then we talk about the enabling keystones. What actually enables your strategy to be successful? Strategic initiatives. What are you going to go do over the next 1 to 2 years? What are your resources that you're going to allocate to this? And how are you going to budget those resources? And then how are you going to plan this? What is every plan? What are you going to actually do to ensure that you're successful? And so those are those 9 keystones of the strategic plan. So when we're done with a building out a strategic plan, you have an understanding of your foundation, the essence of your strategy, and then how you're going to go and implement.
And what I saw the times that I've had exposure to this is like it has a very natural energy arc where like the foundation is, and I want to spend some time talking about through this, but maybe we can do it within the context of my energy arc that I'm talking about, where the foundation is, what do we all agree upon? Like, so like you're throwing everything out, like it's like the brainstorming, right? Don't have any judgment, throw it all out there. And then the middle is the essence of like, okay, now we're having to then start saying no to shit, which becomes, that's the messy middle. Then get agreement. So that way we can then put in the enabling, it's like, now we're going to insert this into the forecast and the operating system. So it's kind of this natural arc that I have found that, like it's a process, man. And what's our mutual client? It's a process, not an event. It's a process, not an event. And it's
Right.
always going to be that way.
Yeah, absolutely. And so I really enjoy that energy flow that goes through, right? Where sometimes people in the first foundation keystones, we're throwing a lot against the wall. We're having ideas. We're making some decisions, but we're not making the decisions, right? And so we're out there and we're saying, hey, what do you believe to be true about your market and your business? Those are your doctrines. And too often those are left implicit rather than explicit. And so we
Let's
get
double
those
click
down
on
on
that,
paper.
man. Like maybe we can go through these. Sorry, like as we're going through this now that that. Do you want to list them out first, or how do you want to do this? Because like I know we don't have to go to every single slide, but like I think we can talk through them within the context and the container we put in here. Do you want to list them out first, and then we can double click. I think
Well,
some of them are so important.
you know your audience more than I do. I could talk about this for 9 hours and do often when I'm doing a planning day, and so I just get going and I roll. I'm trying to keep it relatively high level, but maybe what I could ask you, Ryan, is when we did this exercise and we just went through it, which of these keystones do you think that the team found the most valuable?
Um, well, I'll start with, there's a real reason that I started with winning positions, Greg. Because I think, with how long I've been trying to communicate ideas to business owners, starting with like, what the hell are we trying to accomplish is really important. So the reason I started with winning positions is I think that actually we took too long to get to what is it that we're doing here. So I actually think that like we're going to have to pick a winning position. So I think that's why I started there. Like that's the outcome that we're going to have. We're going to have to integrate that into the forecast and the operating system. And then so I think that is one of, I mean, like you even said while we were at dinner, like I want to die on this hill, just like I want to die on the forecast, because it becomes the foundation for everything else. Like all the other things that we want to do, which is just enhance decision making, is springboard off of the winning positions. When I look at, so doctrines, the bullseye, opportunities, company assets, and the flywheel that lead up to Keystone 6 are all the refinement of forcing that arguing with the team to get alignment for that winning position. So if I were to, to answer your question, I think they're all important. I mean, like, I think the doctrines and the flywheel, I mean, it's hard for me to pick which one, because they're all of those five are are satisfying the refinement of agreement.
And they're interrelated to, there is a natural progression. And I
Right.
think we've spoken about the fact that this list of keystones has been honed over 10 plus years, right? Where not all of them were here when I started. I had others that were there and have been cut out, and some have been tweaked and changed and reordered. And so after doing 75 of these engagements with clients, I really do feel like, okay, this is the right order.
Mm-hmm.
It's the right number. These are the right keystones. And so there is an energy that flows from beginning to end. And so I was curious what you thought was the most valuable, because sometimes people really get into the doctrines and we spend a lot of time wordsmithing and perfecting and saying, yeah, what do we believe to be true that maybe other people don't? And sometimes they look at that bullseye and they say, okay, we need to really think about where we're going. In this case, they had a really good picture of what they wanted the future to be, right? They had a good
Mm-hmm.
definition of success already in place and opportunities galore. Where I thought they found a lot of traction was when we got to the flywheel, and
Mm-hmm.
they actually started to have that exercise of 4 good flywheels to start, down to a flywheel that they all agreed with, and were integrating all of their individual flywheels into one. I thought that was a powerful,
I agree.
powerful
I agree with you
session.
on that.
And then even in the language, when we got to strategic initiatives, we got to budgeting. I thought they kept coming back to this interplay between the flywheel and the winning position.
Yep.
I thought that's where they kind of found their footing and said, "Wow, okay, I get this flywheel. How this is our strategy repeated and compounded over time." I thought they found that traction and kind of that interplay between Keystone 5 and Keystone 6.
100% agree with you. And you know what? It's kind of like okay, I'm thinking out loud here. It's like, I was telling you at dinner, like, you're like, maybe your 3 statement model is like, because I got 9 modules now in my ownership operating system, and finance is only one of them, but it enables all of the decision making. And so, like, it's not that I freaking love finance, but like what I love is information. Like I sat at dinner with a client talking about, okay, well, if we grow at 10% versus like, do we want to hold our margins? Do we want to overpay people because we got a skilled labor issue? How does all of these decision makings or these constraints allow us to get to the $30 million valuation? And like, so it's like, we can't do any of that unless we got the numbers. And so like, when I look at the flywheel and the winning position, agreed, like that is like the funnest part. But what I have seen, Greg, most often, no one has had a freaking conversation around what do we believe. So like all of that messy middle for the first 2 days, like I like you got to go through it in order to have fun. Cause like if we would have jumped straight to the flywheel of winning positions, we wouldn't have been able to like, no one would have said, well, I believe this. And so maybe I'll give it like, maybe we can jump into the doctrines and some of these ideas. Like it's the idea smashing against each other. Like my old business. So if like the copier business, I believed that copiers are becoming a commodity. My dad was like, it's still color. We can duplicate. I'm like, this is absurd. Like, we should fire half our sales reps and put all of the copier pricing online instead of having, anything below a 20. I mean, I'm making something up right now, but like, we never sat down within our executive team to have that conversation to say, I believe that we are getting commoditized really fast. The margins, the equipment disappeared. If we don't start building out IT services and document management, becoming a tech provider, we're screwed. And like my dad was like, more salespeople. And so we never, and like every one of those fights along like the 6 years was because we never reconciled what direction we're going to go. And then it spawned into our executives where I'm getting people on my side, and the exec, in the hallway conversations, he's getting his people on his side, and I love them. You know what I mean? Like dad and I are friends. So it was that doctrine part becomes so important because who was I talking to recently? It's like, oh, it was someone about their kids because like they grew up it was one of my clients. Like he's Jewish, his wife is not. So it's like, how do you raise your kids now?
Yeah.
We should probably have a conversation around that. So,
right. And it's funny that you go there because one of the examples I use when I talk about doctrines is you could have Catholics and you could have Baptists, and they might agree on 85% of what it means to be a Christian. And yet you won't find a Catholic at a Baptist church or a Baptist at a Catholic church. And it's like, it's the differences that really, really make the soup, right? If you want to talk about, hey, what's the difference in these couple? It's the special ingredients that you put in at the end that make it taste totally different, right? You may have the same base, you may have some of the same ingredients, but it's the 2 or 3 differences that really define what it is. And so, same thing with doctrines. And we push people to think through, what do you believe to be true about your markets and your business? What are the ones that are conventional, right? Hey, this is what everybody would believe. And this is what our company, what we uniquely believe or what we uniquely know. And so those insights that they can get to say, everybody in our marketplace thinks this way. We think this way. Oh boy, that is a difference. That does allow us to capitalize on opportunities that they're not going to see, or it puts us at risk because we see it this way. And oh man, what are we exposed to that maybe others aren't? And so having those core beliefs explicitly stated and agreed to, where you can come back and pressure test it every 3 months, right? And one of the things that we do in this process is when we are in that business operating system, we come back and we talk about these things. We talk about the doctrines and we say, hey, do we still believe this? Do we still think that this is the way that we, are going to win in the marketplace? Do we still believe that this is a growing market that's robust and thriving? Or do we believe this is becoming a commodity market and we are going to increasingly be dependent on price? And so having those doctrines, defining what we believe versus what the conventions in the market are, is really, really important as an initial exercise.
And getting agreement on the team. And I think about Greg, like what I would have done differently had we gone through a process like this. And as I reflect, it's like I pushed us too fast into the IT place in this space. Like we weren't ready for it, man. Like financially, and I didn't have so if I would have had my dad and I's valuation and net worth goals, if I would have had both of our understanding of our salary and distribution goals and said, here's our constraints. Now, what do we believe? It's like, okay, well, we do believe that the industry is getting commoditized. Well, guess what, Greg? I'm 15 years removed from this shit. It didn't happen as fast as I thought.
Yeah.
Had we said, okay, we kind of believe this, but we have a lot more time. And so like having that thoughtful, caring process would have gotten agreement on me saying, hey, you know what? I'm okay spending 3 years operate, if we had the winning position, say we want to be potent right now and optimize our margins so that way we have enough margins to add different services to become integrated over time. Like it was just no thoughtful process. And by the way, like when I think about this is where the power dynamics come in versus like my dad would say, this is what we're doing, this is what we believe. And I'm like, well, I disagree with you. And it's like, well, like, and he actually wanted out of his job. And like, I think of a lot of people listening, and that's what you want. It's like, okay, well, we need to hand off the baton. So it's this process of care. I don't know. That's why. So maybe to directly answer your question, that's one of my favorites because it was so lacking in my family business. And it was almost the downfall of the situation. And probably one of the main reasons, if I were to look at why we sold, it's like because we just had no agreement on how everything was working.
Ryan, and that's a shame, right? That's one of those things that humility comes with age, and you just confessed to having acquired more humility as you've gotten older and you've seen it and you've realized, hey, maybe I was moving too fast. Maybe I had a little bit of a misunderstanding of the speed that of the market and what we were up against. And so I think that's a great thing. And as a guy who's done a lot of strategic planning engagements, I can tell you my longest term client is one that when we first started working together, he told me after day one, I said, man, you've got a guy on your team that is a really tough personality. I don't think that he is a good fit. And the owner said, I agree completely. And he will be retiring in 3 years. And I said, oh my gosh, in my mind, I would have said, get rid of him tomorrow, right? But what I didn't realize was even though he was a tough personality, he was a valuable member of their team. They had a culture that told people if you give your best and you're driving towards success, you're going to have a place on this team. And so what has come with me is some humility over those 7 years to see the wisdom and the pace that my client moves, especially in his industry, where he has not lost a single executive. He's got a talented team. He's not one person has left him in 7 years, right? Not one person has found a new job. Not one person has gotten mad and quit. They have naturally retired, but nobody has left for greener pastures because of the culture that he's created. And so I was looking and saying, take hasty action, and may have been right on some elements of it, but in the bigger picture, he was right. And so part of this process and part of doing strategic planning is having, and that's where I've gotten, and that's where, where we were talking about the hills you're willing to die on. What I've come to realize about strategic planning is you go through it the first time and you might not get the perfect version of strategy and strategic plan. What I've come to realize is 70% is really good. And if you can get 70% the first time through, that's great. And then let's keep working together and let's get you to 80%. And then let's keep working and refining and let's get you to 90. And so just that view of this is a process. It's not a one-time thing. It's gravity. It's not earthquakes, right? I talk about that when it comes to, this idea of what are we doing together? Well, it's gravity. We want to put in that consistent pull. Here's where we are. Here's what we're working on. Not we're going to have this one-time event that's going to shake everything up. And boy, it's got a lot of energy to it, but you don't know what you're going to get on the other side. So
yeah, and it's not like summer camp where then it's like you're on this high and then you go back and it's a discipline to say, I am now someone that goes to the gym every day.
That's right.
Even if I have a sprained ankle, but I am now a person that goes to the gym every day. So that way I can be ready for getting, it's the habits and the discipline that provide the framework for when something happens. Like, I mean, over the weekend, like I ate like shit because it was my girl's birthday and I had a lot of stuff that I don't normally do. I just know it's all going to work itself out this week. And so it's kind of the same thing with, with a business. And what I want to do, Greg, is, if we could figure out like 10, 15 minutes of wrapping up and we can quit screen sharing here. But before you do, what I wanted to highlight is like the bullseye, the opportunities, company assets, and the flywheel, and contextualize those. And then what I want to do is then roll into how does this fit inside of my ownership operating system as well as the business operating system. So like the flywheel, which is Keystone 5, like that's Jim Collins' flywheel. So like we can put a link to that book in there. And I love that part as well. Company assets like Ansaf's matrix, SWOT, like company assets and opportunities, SWOT analysis, kind of Ansaf's matrix type stuff, right?
Yep, absolutely. And when we talk about company assets, when I learned strategy originally, I learned it through this asset-based view of the firm. And so when I'm in business school and I'm taking these strategy courses and I'm trying to apply it, there's this idea about, the professor that I had written the book, and it was all about this, what he called the VRIO framework around company assets. And it's what's valuable, what's rare, what's hard to imitate, and then are you organized to exploit it? And so
Ooh, I
part
like
of
that.
that view of company assets is what assets are the most rare or unmatchable, right? Inimitable is a hard word to say, and very few people know what it
I
means. And
can't spell
so,
it. Don't ask.
yeah, I say unmatchable. Like, what assets do you have that would be, even if Amazon wanted to come into your market and spend $1 billion, what assets would be
Mm.
unmatchable for them for a time period? And so, most small, mid-sized businesses don't have a lot of unmatchable assets, but they have a lot of rare assets. And then when you put a bunch of rare assets together, it functions almost as unmatchable. And
Mm.
so, we're looking for those assets that make you you. It's not your trucks, right? Trucks are valuable, but they're not rare. And so if you're running a really, really successful business on, one of my recent clients is running a really large HVAC company. Their trucks are valuable and they needed them. And during the pandemic, there were months where, hey, it was hard. It was rare to be able to get new equipment, but most of the time it's just valuable. But the team that they'd assembled, right? 300 really, really skilled HVAC professionals, and 30 of them, the best team in multiple states. That is a rare asset, almost
Mm-hmm.
unmatchable in
Mm-hmm.
terms of what they were able to marshal together. And so that's what we're looking for. And we're saying, okay, when you have those assets, that then allows you to create a winning position. And
And you're
so,
going to take those assets, make sure that you're making decisions within the flywheel context to get that momentum, and you're
yep,
pointing all of that towards that winning position, right? So
100%.
I love it so much, and it's not just like you said, it's not just the balance sheet assets. It's going
It's
through
the
a
people.
process
It's
through
the it's the
yeah
it's the IP. It's the processes.
systems,
Man, we
yeah,
have really great processes, right? I work with a
industry knowledge or pricing exposure or
yeah. I work with an $8 billion company. I don't do a lot on their on the strategy side on a day-to-day basis, but when we talk about their strategic initiatives and what they do, a big part of it is driven. They are super process oriented. They know what works and they have a playbook that they implement every time they launch a new location. They know what works and they know the playbook and they run the play. And so those processes that they've defined over 50 years is a company asset and it helps them create that winning position. And so, yeah, that's what we're talking about, right? We're looking and we're saying, what are some of those assets?
and
Opportunities.
but that's where like before we move to opportunities, and I just
Yeah,
this is where they're all integrated. Like once you agree upon those company assets, you're synthesizing them against your winning position, against the flywheel, and how you make decisions. So I keep going back to just strategic planning, and then having that strategy is greasing the wheels for decision making.
100%. And you can either make a decision that we're going to use all of our time and money and other resources to leverage our existing assets, or wow, we've got all these assets, but the ones that we're missing are actually keeping us from leveraging it. We've got to go and buy them. We've got to go and partner for them. We've got to build
Mm-hmm.
them,
Mm-hmm.
or some mixture of the two, right? And so that idea that we have assets and we're missing assets, okay, what are we going to do? And how are we going to spend those limited resources that we have to get to our winning position? And we know we can get to that hill, but man, we're missing 5 big ladders. We've got the men, we've got the guns, we've got the,
The butter.
Yeah,
Sorry.
everything else we need. We are missing the ladders. Let's go build the
Guns and
ladders.
butter.
Let's go build the jets, whatever it is. But we need to get here. We've got 80%. Let's go get to 20% so we can take that
Hmm.
hill. Or hey, we've got everything we need. We just need to organize this differently. And our strategy then becomes about how do we actually organize those so that we can implement them more effectively. So yeah, that's really what company assets are looking at. The bullseye, Ryan, and this is
Right.
just a picture of success, right? So many people start down this path where they don't know how they're gonna determine if their strategy is successful. Well, your strategy is successful if you get to the bullseye, if you hit the mark. And so it's that picture of success into the future. We want to have this kind of revenue. We want to have this be true of the way we serve our customers.
Can you pull
This
up? Can you pull up
this
the bullseye before?
operating
Sorry,
vision is
sorry to
really
interrupt.
essential.
Sorry to interrupt, Greg. I think it's worth pulling up that slide, the bullseye, and that's what I wanted to do before we jumped into the how do you integrate this stuff, because I think that like outside of all of the keystones, that is a strategic plan that helps us identify a strategy. The bullseye being multidimensional, I want to make sure that people really understand that this is different than an EOS VTO for the most part, because it's multidimensional, making sure that it is not just revenue. The financial lens, I'm going to force people to think about their cash flow and their valuation, but there's other dimensions of like in 5 years, what does success look like? You want to explain that?
Yeah, so these are clients, these are actual clients, changed, but real things that people have decided they wanted to do. When you look at this, let's take the one example number one, Munich Machines. They were in the industrial machine manufacturing business, and they said, "Hey, we want our cultural success to be that we have our employee satisfaction at 84%. Our operational metric was that they have a project-based business, and they said we have this target of project score being at 90. Doesn't mean anything to people outside of their business, but to them that was, man, if we're operating at a 90 on average, that means we are having a lot of success. Client focus was that they were at a percentage of service retained at 80%. So they had all of these all of these contracts out there that they were serving, where they would go and work with them for 3, 5, 10, 20 years. And so they would say, hey, what's our percentage of contracts retained? And then on the financial side, they said, what is our EBT as a percentage of sales? So they wanted those earnings before taxes to be at least at 28%. And so they looked at their strategy and they said, the reason that we are doing this plan, the reason we are looking at our strategic initiatives that were ultimately going to be launched, it's going to be launched so that we hit these cultural, operational, client, or financial targets.
I love it. Yeah, it's multidimensional. Like, I mean, I can't remember how you worded it, but it can't just be about the company, right? You like the client, like the client where you're delivering the value to the client there has to be a client focused one. I mean, I just love it because this is what private equity firms are not doing, right? Because they're just looking straight at the financials, and like
Right.
every single person that ends up selling to someone like that only looks at the financials, they know that the whole company is a house of cards because you're not looking at the cultural stuff and you're not looking at the client stuff and you're not reinvesting into the operational stuff. So like, I mean, it has to be, I think, 4 dimensions like this.
We think it's really important. And when you tell people, hey, let's just define what success looks like, this exercise is really good because it forces them to put a number, put a target, and say, hey, in 5 years, this is where we want to be. Okay, now our strategy is designed against getting to this bullseye.
The bullseye gives us insight. So we agree upon our doctrines without even looking at it. Let's see if I can just, our doctrines that we agree upon help us identify our bullseye. Then we've got our opportunities, our company assets, and our flywheel that all orient us around the winning position. I mean, we're synthesizing all of this stuff to say, okay, when I look at a company from the board, how are we going to hit those numbers and why? And what does the company look like? I mean, like, and how are decisions getting made on a day-to-day basis?
And by the time you get to winning, when you get through the winning position and you say, okay, now what are we going to go and do? And you define your strategic initiatives. Even when it's been a hard road, and we just went through our planning together, they really wrestled and they really pushed, and they had those moments of tension. But when we got to the place where we were deciding what they were going to go and do, it wasn't too difficult, right?
Right,
There
right,
wasn't a
right.
lot of fighting or arguing because we walked from belief through bullseye. Hey, this is where we're headed to. These are all the things we could do. This is our strategy to now. Okay, it's pretty clear by the time they actually say, what are we going to go and do for the next 1 to 2 years? Pretty clear on what they're actually going to go and do.
And that's where you have your strategic initiatives, right? Where like you're saying,
Yep.
okay, it's not
Yep.
totally the 5 year. The 5 years a little hazy, which is okay. The 1 to 3 or 1 to 2 years is like, okay, here are the big things that we're going to have to think about,
Yep.
that are going to be connected to all the other,
Yep.
exercise that we went through. But then like, all right, well, we got to go build some sales teams. We have to go implement a software. We have to go talk to this vendor. Like, no one's
100%.
arguing about the why. And like 99% of the arguments are like, why are we doing?
That's right. And now you've got to tie back to your strategy. You know that you've looked at all the opportunities that you could do, and you've made a choice on this is what we're actually going to go and do.
You want to quit screen sharing so I can see you a little bit
Yeah.
bigger. And I think, as we slide into home here, I think there's some assumptions I want to take for the people listening in is some assumptions on ownership goals of like cash flow from ownership distributions or valuation. You can go listen to it. I'll put some links, and then also the budgeting of the financials with some of the Pat Hobby, which by the way, for whatever it's worth, I met Greg through Pat because they worked at the same PE firm together years ago. So like there's this ownership goals, financial model that helps bring into light. And then we went through this whole strategy of the predictable revenue. That's why it's the the fifth module in my playbook. Now we have to roll this in to an operating system. And so like,
Yeah.
it's not that complicated, right, Greg? I'm like,
No.
I just,
No, this is the part that I underestimated how few people have an operating system. I thought everybody would, and fortunately they don't, right? And so I underestimated that. But companies overestimate how hard it is going to be to put it in, right? It's really not, we're not talking about rocket science here. I went through an exercise with a small but rapidly growing company in, let's see, we put in their operating system in 6 weeks. And they had what I would call a B or a B plus operating system within 6 weeks, and they weren't spending tens of hours every week on it. They were
right.
spending a couple of hours. And when I talk to the owner of the business about it, and I say, hey, it's been 3 weeks ago, and I have a conversation with him, and I say, how's it been? He's looking at me and like, this is exactly what we needed. Because now when we're having one-off conversations, we're not just losing that dialogue. We have a framework that we say, okay, this is an issue. They've got wording, they've got knowledge of what they're talking about. They put it into the software they're using to run their operating system. They know it's translating back to work that they're going to do, conversations they're going to have. And now it just gives them a framework that all the other stuff that they've been doing, they now have a process and some tools to support that process whereby they can make decisions, implement change, manage the numbers, do what they need to do in order to actually see those strategic initiatives get implemented successfully. So, common language, common tools, accountability for time. That's really what we're talking about. And in my naivete, business, a business school kind of a mindset, I'm like, oh, this is the easy stuff, right? This isn't the strategy. The strategy is the hard stuff. but this is the stuff that gets missed. It's the stuff that people don't have. Um, the business has grown and they have never taken the time to say, how are we going to operate it from a holistic view? And that's what the business system does. That's what the business operating system does.
It's it never ceases to fascinate me about, like, because like, and then the counter to, not the counter opposite, I don't know, is like, you have an operating system but no strategy and no ownership goals. Like the whole thing just is so fascinating to me, because like I've lived how, when you don't have any of this stuff, like I go back to the family business, it's a total chaotic nightmare, like emotionally, financially, like just all of the shit that's going on. And so like when I think about, okay, I'm going to relate to this to health because I can't not. It's like, okay, the ownership goals are like, what are the actual goals? Like from cash flow and wealth and the timeline. You have to start at the first principle. So like, are we running an Ironman, or are we trying to be able to bend down and pick up our grandkids and be able to get, we could trip and not break our hip? Those are two wildly different goals that will orient what you do every day, right? So like the goal, then you go, okay, well, the strategy is like, are we doing CrossFit? Are we doing HIIT? Or are we doing like the big, muscle groups? I mean, like all of that will. And when people don't have a freaking plan, Greg, I mean, I've been going to the gym now for 20 years, and like, but there's so many good reels and memes about this. Someone that goes to the gym and has no workout plan is like the most hilarious shit ever. Like they're just doing stuff, and you're just wandering. Like, they're at the gym.
Yeah.
What are they doing and why are the two questions that I have. And and that's like having an operating system is you're going to the gym. You're choosing to have a weekly meeting, a monthly meeting, a quarterly meeting, but like just because you're there doesn't mean you know what the hell you're doing and why you're doing it. So you have to stack these things on, but you can't just have a diet plan and a goal without choosing to go every day.
Well, and Ryan, I like that analogy because we could extend it one step further and say, as a guide, I consider myself really important and essential at the beginning. And then what I'm doing is I'm checking in and I'm helping and I'm holding you accountable and I'm tweaking and changing. But you need somebody, you need me a lot through phase 1 and through phase 2 and at the beginning of phase 3. But then I'm there helping you persist, right? I'm the guy that's working with you as the consultant, right? You use podcasts, you use friends, you use people on your health journey that are part of your process, right? And so for me, what I would often do is I would get somebody, I would help them lose weight or run the marathon or whatever it was. I'd shake their hand and say, they've got it. Good luck. We've done it together. And then I would watch them sputter and not really have a system, not really know, okay, what are the next 2 weeks? What are the next 6 weeks? What are the next 12 months? And so that's where phase 3, this idea of persisting, where as a guide, it's my great joy now. I'm working with many clients who I've been working with for multiple years, where they know what they're doing, and I'm working with them, and I'm running different parts of the process because they look and they say, we really love the accountability. We love that Greg brings different perspectives, but they've got the basics. They've got 96% and it's working well. And so that is a real joy for me, is to say, yeah, I'm not here with you at the gym all the time. I'm the guy you call when the machine breaks, or I'm the guy that, hey, we're changing our goal slightly. What do you think about this or that? And so it's really, really fun to get to work with folks that have successfully implemented that business operating system. And they can now, I can watch them kind of with that idea
succeed.
Of, wow, look how strong they're getting. Look how well they're implementing. It's just a blast.
And as we wrap up here, I think just to give the listeners a specific of like how I see these different components fit together, and even you, like as you're training other strategic planning, simply strategic guides, like you're doing some implementation. So like where I see this going, like the decision that this mutual client of ours, we're like, what I said, and I'll say it to everybody, like, I don't care what strategic planning process people use. I have found yours to be the most actionable and the most digestible, but you still need one. I don't care what operating system you use, but you still need one. And so like where I see you fitting in and the decision that our mutual client is going through is like, we like this is it's an ownership coaching client of mine. I have monthly meetings looking at on track, off track. We've clarified the ownership goals. They're very clear. We're having quarterly board meetings where we're looking at it from the investment perspective, like what's the working capital, the cash flow, how is the ownership goals projecting, and how is the operation satisfying ownership goals as if we're a private equity firm, even though we're not. And then they have to have this operating system so they can choose to help or to engage with you to have to be the implementer in the EOS terms, or they can hire another implementer. But it's like, again, there's a benefit to having the strategy as well as the person that's in, managing those implementation meetings. But when I think about like, as people are self-implementing at some point, having someone that helped through the strategic plan, like I see a world where we'll zoom you in to come into a board meeting once or twice a year to say, okay, we're going to reorient ourselves on the strategy. But like, you're having another brain at the table to say, okay, are we on track or off track? Have things in the market changed? But it's really just a board. I don't know, man. I just see the ownership operating system, the strategy, and then the business operating system working hand in glove very well together.
I think it does. And you've worked with enough owners to know that there are a lot of demands on that owner's time and energy. And so when I think about the business operating system and what that should and how that should be functioning, it really should be their team, right? They should be the accountability piece for their team executing the business operating system in a way that's healthy and functioning. And so, whether it's you partnering with that owner, I do a lot of the same with some of the clients that I'm working where
with the team.
I'm that owner sounding board, right? His or her team is out there implementing and they're running and they're doing, but I'm the coach. I'm the person that's there with that owner saying, hey, what about this? How are you doing here? And so you're playing you're playing that role with your clients, and it's really, really helpful when you can help your owners understand you should not be in the day-to-day of this business operating system, but you need to have a business operating system founded on a strong strategy as part of what you're doing. I think the work that you're doing, the material that you've put together, helping owners get to the place where they're thinking about strategy and business operating system is really, really important.
Capital allocation, right? I mean, like that's what we all like. Hopefully, if people are still listening in. Being a decision-making machine doesn't require a lot of time, actually. Like, I mean, like we can make decisions if we have a good strategy, we have a clear picture, we have the good financials. Do we do A, B, or C? And then who's going to do it is really what we're constantly doing. And it doesn't require someone sitting in an office, and it doesn't require 8 hours a day. It's making sure that the people implementing and the strategy that's being executed is the right one. Right?
100%. You want to make sure that your time and energy is being optimized. And in this process, bringing in someone to help with strategy and building out a business operating system that's going to work for your business is absolutely something the owner should be focused on. Running that business operating system, ensuring that all the I's are dotted and T's are crossed, that should not be them, right? And so, so that's a big part of what you're talking about.
Dude, so fun.
Is anybody still listening after an hour and 46 minutes? Like, are they like, man, we got to hear every word that's coming out of Greg and Ryan's mouth? Or are they
I wanted to make it comprehensive, man. Like we've got a couple of the older ones out there. This is going to be something where like, I think about like the amount of meetings that we had prior to this, other client. And I know there's multiple other people thinking about this topic right now. So I know that quite a few of my coaching clients are going to be listening to this. So thank you for your time, man. We'll put the links to everything.
Anything I can do to support you, if you ever need me to jump on with an owner, you need another voice in their ear saying, hey, you need strategy, you need a business operating system. I'm always there to help.
Thank you, my friend. So fun.
Have a great one.